Welcome back. My name is MrSchroeter, and I want to thank you for tuning into my channel. Please make sure that you subscribe to the channel. Hit that join button. Join the channel membership. Make sure that you are tuning into all of our uploads, the previous uploads that we've had, as well as our new uploads. Ring that notification bell. And don't forget to subscribe to our other channels, the Nigel Schroeder Show, which is my podcast, as well as the Credit Sensei, which is my other channel, where I'm giving you guys all types of tips on building your business and personal credit. The Cash Couple is another great channel that we have where you're going to get to see some behind the scenes action with myself and Crystal. And don't forget to go back and tune into some of my shorts where I give you guys some of my keys to success and some quick credit tips. Check out our playlist as well as our previous live streams. And with that being said, go ahead and sit back and prepare for the show. All right, welcome back. And today we're here to talk about the good old positive payment on your credit report. Today we're here to talk about payment history, why it's so important, and I'm going to give you 5 things that you may not have known about your payment history. Again, that is 5 things, 5 that you may not have known about your payment history that are going to allow you to maximize your credit score. Make sure you stay for number 5, because number 5 is a tip that you're going to need to know to preserve your credit profile for the future. So, thing number 1, positive payments are your largest credit factor. All right, I want everybody to repeat after me. Positive payments are your largest credit factor. So, what does that mean? Okay, with positive payments being your largest credit factor, accounting for 35 to 40% of your score, positive payments could be the difference between you getting approved, getting denied. Positive payments could be the difference between you getting a low interest rate or a high interest rate. Positive payments could be the difference for you. You may be getting denied and you're wondering why you consistently are getting denied. And the reasoning behind that is your positive payments. So the next thing that you need to know is that positive payments add age to your credit profile. And by them adding age to your credit profile, they are in turn affecting another credit factor. So because you have those positive payments reporting to your report on your payment history, every time they do that, it adds a check to your credit profile that this account was for sure open and being used this month. So by them adding that additional age to your credit profile, they're adding the age, which is going to in turn affect another one of your FICO factors and going to boost your score another 10 to 20%. So now the next thing that you need to know is that you need to keep your accounts from going dormant. So what does that mean? Once again, you want to make sure if you have a credit card or anything like that, swipe the card and make sure that you make a payment to that issuer. That way, that issuer has to put on there for that credit card that the card was used that month. That's going to increase your payment history because it's going to add payments to your report. Same thing for if you have student loans or any other loan that may be getting pushed back. You can actually, if your loans are in deferment, you can make small payments, and those payments even can be added to your report because you are showing good faith and making payments. So the next thing is that you can take a cash advance, right? So you can go to the bank before your card's due date, take a cash advance from that same card or a different card, and use it to pay your initial card. So, with that being said, if you're in any form of credit card debt, there's no reason for you to be missing payments, because by you already being in debt, it's not going to hurt you that much more to take out the cash advance to keep those positive payments. And that could be the difference in you being able to get approved for a balance transfer card, or for you not to be able to be approved for a balance transfer card, because you have that cash advance money with those additional funds. And lastly, what you need to know about positive payments is that when you are making positive payments on your credit report, you are putting yourself in a position to be able to get larger, higher limit, lower interest funding. Banks look heavily at payment history when they fund mortgages and auto loans. They look extremely heavily at these for these larger loans, especially mortgages. You want to keep your payment history as high as possible, because negative payments stay on your report for 7 years unless you come to an agreement with your issuer to have them removed. And as long as you have an account open, if it's a revolving account, that negative payment is going to show from when you missed it way back 5 years ago. Even if you close that account, it will still show on your credit report as closed with a missing payment. You do not want factors like this to be affecting your credit score. You want to be able to take advantage and make money and capitalize off of your credit. So with that being said, I want to thank you all for watching. Thank you all for tuning in, and we'll see you all in the next video.